Good morning, everybody. Welcome to the morning show. I am excited today. Big guest on the show, Mr. Mike Hurley, joining us at 9 o'clock today. Uh, when last we spoke to Mr. Hurley, it was at our chart summit a couple months back. It's been a long time coming to get him on the show, so I'm hyped for that. You should be too. Before that, though, we got JC, we got Strazza, we got all you in our chat. Good morning, Rachel. Good morning, Brad. Good morning, Vagtana. Good morning, everyone. Let's roll.
How about Mike Hurley coming on the show today? That's good. That's cool.
Yeah. Oh, yeah.
Strazza very excited for that.
Mm-hmm.
I figured you would have stolen Hurley while I was away at Disney.
No.
No.
You saved Hurley for me. I appreciate that. You know, it's the little things, Strazza. It's the little things.
We do that more often than you think. Say to Spencer, no. JC needs to be here for this one. Sure.
Sesh asking, when's JC going on the compound? I'll actually be with the boys in New York, Josh and Batnick. 2 weeks with Fami, actually. Me and Fami together.
Wow.
You think that's going to be a good episode?
Yeah.
2 weeks, so start of the year.
Who am I going to rip more? Fami, JV, or Batnick? Who am I going to lay into the most?
Probably Fami.
By the way, Josh Brown's daughter going to the University of Miami. How about that?
So cool. Yeah,
I got him. You know what I got him as a present? He doesn't know yet. I'm going to drop it off at his office tomorrow. I got him a Canes Jeremy Shockey autographed jersey.
Wow.
That's a good one, right?
Great call.
Great call, right?
They had so many stud alumni football players.
Alumni is a strong word.
All right.
They they enrolled in the university, is my understanding. I don't know about this whole alumni stuff.
Fair enough. Yeah. Didn't Greg Olson also go there?
I think Frank Gore just graduated.
Wow.
Because they go back.
A couple of weeks ago, he just graduated. He just graduated now. Frank Gore. He's like 100.
Ray Allen graduated UConn last year.
Well, you know, he was busy winning championships. You know, can't be going to school like that. You know, who's got time for that, right?
All right. Should we jump into a little state of the marketas?
I think we should. Right.
You got charts?
Big conference call last night. I thought it went well. I didn't get a text message from Strazza right after telling me how good it was. So was it not that good?
It was fantastic. You don't need that from me.
Last time I got a text message from Strazza telling me how well I did. This time it was just silence.
I
friend.
I did not watch live, but I caught the replay last night and the rest this morning. Very concise, I thought. Very it felt quick, you know. It felt
well, it was fast. An hour. It was over an hour.
I know, but it felt
like it was like 61 minutes and 160 charts.
That is quick, though. You go 90
for quick and concise.
Yeah,
you know,
you've gone 90 before, so that was it. Felt
He went 90 last month. I remember it well.
Yeah.
So I could have gone forever.
Did you tell everybody to go home halfway?
No, but I kind of chuckled because I got to that point in the chart where I was like, well, here's the dollar. You know, dollar up, stocks down, dollar down, stocks up. That's all you need to know.
What's a money Mitch?
What's a money Mitch? I don't know what that is.
I don't know either.
What are we looking at?
I'm not sure.
Anyway,
but it went well. You know, we had some good back and forth with some of the ASC premium members. You know, we went over some ideas, some ongoing trades. You know what's interesting is that we're at this point in the market where a lot of stocks, I shouldn't say a lot of stocks, but there are stocks that are hitting our targets. But you know, I reiterated last night, and I'll reiterate again, that the market doesn't give a damn about me or my price targets, right? So in a lot of these cases that our targets are achieved and the trade's complete, there's another trade already setting up. right? There's already another trade in the works. I think Nvidia is a good example of that. Why don't we start there? Why don't we start there? Why don't we start with the old Nvidia? You know, this thing is a leader. One of the best performers, despite the $1.2 trillion market capitalization. Think about that. So even though this thing's a monster, it's still been one of the best performers.
Yep.
Was one of the first ones to break out to new all-time highs, by the way, which was already pointing, already sort of setting the precedent for others to break out above their late 21 highs. And we're seeing that, right?
Yep.
Semis are making new all-time highs. Nvidia had already done so. So I like this trade a lot, above 500. If it's above 500, which I checked this morning, it's right at 500. If we're above 500, I like this from the long side. I think 50% of upside, that'll put it at like a $1.8 trillion market capitalization, pushing $2 trillion. What do you think about that?
This was the original large cap tech leader, right? This cycle.
What about Microsoft?
I think Nvidia led more.
Why? Because it outperformed Microsoft?
Yeah. First one back to the highs.
You can't say Microsoft was ripping throughout. Microsoft was up like 7.5% in October.
Nothing against anybody. If you had to pick one leader, Nvidia, right? So you're saying it hit
the year. You're saying this year in general.
Yeah,
that's
right.
That's probably right.
So back to the well, right?
It broke out. Our target was hit.
Yep.
The market actually respected our target, consolidated below that resistance for how long has it been now?
Couple months.
Few months?
No, like 6 months.
No, like if you call it like late August, September, October, November, December, 4 months. 4 months of consolidation. It's well deserved, by the way, I might add. Well deserved.
Since July, it's been in this range, though.
Dude, this thing, I don't know if you realize this, but in about 10 months, this thing went up 350%.
The best overlay for Nvidia, too, has been Broadcom. And look at what that one's done.
Oh, yeah.
Look at what Broadcom has done.
Look what it did last week.
Yeah.
Best last week.
Best week ever.
Since I know you didn't see it, JC, I bet you Steve did, though. There was an article. I don't even remember where I saw it. Like yesterday, maybe it was Friday or over the weekend. Yeah. Nvidia's stock run has been so good that their employees are becoming too rich and therefore unmotivated. Did you see this?
No.
Dude, that's a thing. That's
hilarious, by the way.
Yeah.
Is that what happens in bear markets? Is that employees become too rich?
People are leaving the company because they're like, okay, I'm good.
They're retiring.
Yeah.
I mean, I respect that, right? Like if you've got enough money, if you hit your number, throw up slide 3 there, Spencer. If you hit your number and you want to peace out, why not?
Is there a better looking group of stocks than semiconductors right now?
You're gonna see me again. You hear me?
Yeah.
I'm just kidding. I what am I gonna do? I'll be doing this from my beach house, right?
Yeah.
Dude, these beach houses are expensive, bro. When's this recession gonna hit? Jesus Christ. I need a good recession to get my beach house on the cheap.
Yeah. Sure.
Speaking of houses, you see the chart I dropped in yesterday? Did you talk about it on the call? The Quicken Loans chart?
I actually I did. The Rocket?
Dude. Yeah. Sorry, Rocket Company. It's Quicken Loans. So the nation's largest home loan lender, home loan provider, it makes sense that this, stock would start working in an environment where like home construction is doing what it's doing as a group. The short interest is over 20%, it's like 21 and change, and over 10x days to cover ratio.
You throw it up? Throw it up.
So these stocks are really, it's getting squeezy out here. And you can see it in this one. Fonz, you got it? Or you want
Slide 4, I got it.
So there's, remember that there's 2, right? There's Rocket and there's UWMC.
Somebody said to me the other day that or when I tweeted that UWMC is the leading mortgage lender.
They are rivals. Their CEOs do not like each other, and the pettiness is high.
What is their brand? This UWMC, like, what is that?
United Wholesale Mortgage. That's
Never heard of it.
all right. Well,
So
they're
hold
both.
on. What is this? Why are all these mortgage companies in Michigan and like what's going on here?
Dude, I don't know, but they're both based in Michigan,
know.
and Rocket Mortgage is headquartered downtown, like actually downtown.
Right.
UWMC is I forget, it's in one of the burbs. I forget which
In
suburb they're
Pontiac.
in. I don't know. They're not in Pontiac.
Oh, they are.
I don't. Okay, well, regardless of where they are.
According to my sources.
Okay, regardless of where they are.
Good.
UWMC bought up all the billboard ad space on the highways leading into downtown Detroit, just to spite Rocket Mortgage, because that's where they're based. So,
fun stuff. You know, little hometown rivalry.
Yeah,
among the mortgage lenders.
Yeah. Anyway,
more and more stocks continue to work. JC's over here talking about the leaders and charts like Nvidia and buying these new highs. There's also just, fresh reversal patterns printing or completing every day. And this one really stuck out with the rocket. We've been looking more and more, and that's bull market information, right? We were laughing on the analyst meeting last night that we're running our freshly squeezed list like every couple of days. And that's only something we do in bull markets.
Why don't you explain what the freshly squeezed list is?
So we are scanning for the most heavily shorted stocks, most hated stocks in the market, stocks that investors are betting against in size. What you tend to see is when the animal spirits break loose out here, these stocks start squeezing, right? Take a little bit of momentum, and then they're short covering, that fuels the rally further, and you get charts that look like this RKT. Upstart is another one. The crypto miners have some good short interest in them. Even, Carvana looks great. We were talking about the other day. So it's the kind of market we're in. You could take shots.
Carvana looks great.
It does. Look at that base. I mean,
these stocks about that base.
I mean, that was a zero candidate, right? That's one that we laughed about just last year. The prospects of it going to zero. Look at you now, Carvana.
As JC says, there's time and a place, right?
There's a time and a place for everything.
Yeah.
There's a time and a place for everything. What else stood out at the call last night there, Spencer?
I had never even heard of half of the sentiment indicators that you had talked about.
Sentiment indicators. I brought up two. One of them's our
composite. No, you brought up like 3 or 4. I brought up
2. I showed 2.
Well, whatever the first one was, I never even heard of that.
What is this strange sentiment data?
Yeah,
he's just making shit up. There's
no,
strange. Yeah, you are.
You didn't watch the call, liar.
I did watch the call. I didn't watch it live. Like I said, I watched it last night, and then I finished most of it this morning.
It is, it's probably worth mentioning. The market vein probably.
That's the one. Market vein. That's the one. Thank you. I never heard of that.
All right. Well, market vein is probably like the oldest, right? Probably the sentiment that goes back the furthest. So it's a good one. Why don't you show slide 6 here? So this is the composite, which is really surprising considering the historic returns investors are receiving. I mean, it's been impossible to be bearish this year, and somehow people keep finding ways. And when the AAII is probably the most popular. I don't know why. Probably because it's the one that moves the fastest. It's the one that is driven most emotionally, right?
But that, to me, I like it less because it moves too much.
Well, I totally agree. You got to smooth it out, or just add it to a composite like we do.
Yeah.
You've got the investors intelligence, right? So these are the advisories. Then you got the NAAIM, which is the active investment managers. You got the VIX. You got put call ratios. When you add them all up together, we're pretty much right in the middle. You'd think there'd be more optimism, would you not?
I mean, it rallied back into like opportunity range, but then the market's ripped for a couple of weeks. You think it should be back in the risk zone?
I think so. I would have thought, after these months. I mean, we're talking about like historic returns for the year as well as over the last couple of months, right?
I would have expected it to make a new low, right? Beyond the summer low that you see, and not even close. Yeah, you're right.
Yeah, interesting.
I think they seem more bullish. It seems more bullish out there today than back in June and July.
How about money market assets decreased last week? Ain't that some shit?
Now we're talking.
Decreased by 11 billion. How about that?
I think we're talking too much about this.
Talking too much about the record levels of cash on the sidelines? You think that we're talking too much about this? I would argue we're not talking about it enough. People are like, oh, what's going to take the market higher? Earnings? No, stupid. Has nothing to do with earnings. It's positioning, and investors are loaded up in cash more than ever.
Investors didn't buy this dip into the fall either.
They got squeezed into it.
Yeah.
Yeah, they got squeezed into it. It was really lovely to see.
The chase is still on.
Yeah, it's pretty awesome. Retail investors actually added to their cash. Institutions dropped by 14 billion. But basically, how about that? You're not surprised that the market's not more optimistic right now?
It's hard to say.
I do like how the perma bears are pointing to the AAII survey saying that everyone's bullish because they don't know how it works, right?
Here's my take on
they're perma bears for a reason. They obviously don't know how the market works in general, so it shouldn't be surprising, right?
Here's the thing with sentiment right now. It's not a problem, right? Not a headwind, not a tailwind, middle of the range. It's a nothing burger, really.
It's a nothing burger. No, that's
not an extreme at all. We talk about how we're probably in middle innings, right?
Yeah, but now do money market funds at record highs. You don't think that is tailwind?
You don't know where that capital eventually gets deployed. You don't know. You don't know how sticky that is.
I was just going to say that, Steve. We don't know how sticky that is.
I could be some.
And these institutions are underperforming, and they got career risk because little Timmy's private school costs a lot of money. And Martha's Country Club membership ain't cheap.
Speaking of career risk, we're at the point in the crypto cycle where Mike Novogratz is coming back on the cable networks.
When he gets a tattoo, that's the short right there.
He seems like a fun guy.
Hell yeah, I'd party with him.
Yeah.
I'm surprised. I mean, listen, I if I didn't have kids and I'd be out and about, I probably would have partied with him by now, right? At one of these crypto things,
I got no problem with Mike Novogratz.
No, I don't either. Let's go quick rundown. Dow futures up 80 points because you see that's what stocks do in bull markets, right? They go up quite often, in fact. S&P futures up 10 handles, 20 basis points. Bond futures up 60 basis points, up again. Gold futures flat. Silver up 50 bips, up to 24 and a quarter. We've got copper. Copper up a stick, full percent there for copper, inching higher. They're going to maybe break out above that $4 level. Crude oil flat. Dollar mix with the yen getting the shit kicked out of it as the BOJ pulled some shenanigans last night, is my understanding. Shenanigans out of the BOJ.
More shenanigans from...
I can't believe it. I can't believe it. And then, of course, just a quick look at the funny money.
Oh, yeah, big move from Japanese 10-year. After all this rising rate stuff, it's important to note that we're basically going to go out of the year with interest rates at their lows of the year across the board. Not just, the U.S., we're getting close to lows from earlier this year. Go over to Europe. The Eurozone yields, they're all at their lowest levels since like January, Q1. So in just a month and a half, 2 months, gave back all those gains.
That's right.
Year.
It's crazy. These break even 5-year, 10-year break evens were right all along. I can't believe it. And then just quickly on the funny money, Bitcoin up 275 points. It was up a full $1,000 yesterday, up to 43,000 on the old BTC. Total crypto market cap pushing up against new 52-week highs, up at close to 1.6 trillion. Ethereum holding its gains, flat on the day, 2222, and the old Solana sitting right around 75.
This is a great time Actually, Louis was laughing at me last night. This is a great time to scan for super, super short-term relative strength, right? Primary trend is up in these cryptos. They've gone through a very, very short and not bad corrective wave, but a corrective wave nonetheless. Run a 3-5 day rate of change, right? Anchor performance from whenever Bitcoin peaked. Find the ones that either went down the least these past couple of days or went up through all this. Those are your leaders.
You know what's not leading is ETH BTC. Throw up slide 2 quickly there.
That's the other thing. When you're picking these cryptos, it's not enough for the chart to look good. You want some form of leadership there. And this chart could have kept you out of being in the laggard like Ethereum. I didn't pay enough attention to it, I guess, because I'm sitting in ETH. But
you're the one that's telling me that I'm talking too much about the flippening. I think it's a pretty important. You're finally coming around.
I just want ETH to start outperforming.
Yeah, who doesn't?
That's crazy. And a lot of them too, like this Atom, the Matic. I'm done with the Matic because they go down or they go up the least when things are good, right? They don't participate enough to the upside. And then we get a little bit of weakness and these things get rocked. So there's other ones working really well. Get rid of the ones showing relative weakness. Yeah, Fetch AI is one that will pop up on that relative strength scan that I'm talking about. ATX machine.
Yeah, man. Totally. 100%.
Me too, Rachel. I'm over it.
You know, I want to talk about something because I think this is something that we're going to be talking about a lot in the coming year, and that is our Latin America scan.
Yeah.
Slide 2. Throw up slide 2. I think this is important. You know, this is something that I'll take credit for this one. I came up with this one. Got no pushback from any of the fellas. Everybody agrees that we should focus particular attention on some of these Latin American countries. Mexico looks great. Brazil, Latin America, both making new 52-week highs. Not things you see in bear markets. What stands out from this scan? I'll start with there's definitely more stocks in Latin America that trade on US exchanges that are over $1 billion market cap than I expected, right? What is it, like 63 or something like that?
It's in the number was in the 60s. It was fewer than I expected.
Spencer, how much time have you spent in your career looking at Latin American small caps?
Small caps? None. I was going to ask you though, like how many sectors are represented here? Like 3, 4?
Fonz, throw up.
I mean, look at the industry. I mean, just a ton. You've got energy, you've got consumer discretionary, consumer staples, utilities, real estate, materials, telecom, industrials. So I'd say all of them.
Okay.
Everything except tech.
Can we pimp?
The one that matters. Okay. The biggest one.
Well, the one that matters in America, your home country bias is oozing out of you, Spencer. You know that there's this whole world out there that does not revolve around the state of New Jersey.
Right. Why is America the largest market? Because it has tech. Yeah.
Dude, Apple alone is larger than the entire United Kingdom.
Yeah, I know.
I hate those stats.
What?
I hate those stats. The United States, like, first of all, they don't operate in just one country. So why are we comparing it to just one country? Mind you, a country that is, like, I don't know, far smaller than the United States. It doesn't.
It's just because it's just funny. You don't think it's funny that Apple's bigger than the entire United Kingdom?
It should be.
I agree.
Many multiples bigger.
What the hell have they done for me lately?
Hey, Mercado Libre is a monster. Can we pimp out one of these long ideas from the scan? Or are they
pimp away?
Pimp away. Let's do the ITUB, the ITUB, because banks are a place to be. Again, who knew? Speaking of things that change throughout the year, like interest rates, how about the price action from banks? We got some nice reversal patterns going on here, some longer than others. This was a weekly chart. You got to really zoom out on this one, but this is what we're seeing. Not just in the banks in the U.S., but even nicer reversal pattern in some of these banks overseas. So this is.
What do you think, Spencer? Brazilian regional banks? You have enough Brazilian regional bank exposure in your portfolio?
Unlikely.
This is not a regional. What would a regional bank like? What? So it operates in a region of Brazil, not all of Brazil. It's got $30 billion market cap. It's probably one of the bigger banks in Brazil, if I had to guess, with a cap like that. Regional bank. It's
I don't
international.
know. Looks like a tech. Looks like one of these like growth stocks that have been basing forever, right?
When
Looks like a lot of stocks.
No, it doesn't. The drawdown wasn't anywhere near as bad.
Drawdown.
Yeah, I guess it never recovered past after COVID. Yeah, you're right.
When the banks look like growth stocks, bull market stuff.
I'm told it's a bear market. I'm curious to see what Mike Hurley thinks, if it's a bear market or a bull market. What do you think he's going to say? What do you think he's going to say about that breath last week, huh?
That's what I want to ask him about. You know, how big of a deal, how big were the readings on his indicators from some of these moves last week?
I'm curious his thoughts on just how bad investors are at understanding market breadth. Like it's been a banner year for just bad stock market analysis. Like this whole like Magnificent Seven ridiculous nonsense. Like people are just, and I don't even think that it's people that are bad at math, because it's really just, it's second grade arithmetic. I think it's just people are just lazy. They hear something like some pretty lady on the TV says something and they just take it as fact instead of going and actually looking for themselves and counting,
A lot of the bad takes come from non-technicians, to be really fair to technicians, right? Because most people know enough about technical analysis to hurt themselves.
Yeah.
Breath is a perfect example of that. So you see it misunderstood and analyzed poorly all day out here. But it's not technicians doing that.
And by the way, just something else, about, people are like, oh, well, some people just got it wrong. Yeah, there's nothing wrong with being wrong. Like, it's okay. We're wrong all the time. It's staying wrong. That's why you're an asshole.
But a lot of people are staying wrong too long out here this year. Some stubborn folks out there
with their yield curves.
It probably took some people most of last year or all of last year to turn bearish. So they're on a lag, okay? So
that's how it works.
They just kind of got here.
People were turning bearish in the fourth quarter last year after the market had already bottomed in June.
It's a mess in people's mind, right?
Beautiful thing, and it's our job as investors to take advantage of people's bad decision making. Charlie Munger, rest in peace. If people weren't wrong so often, we wouldn't be so rich. What a great quote.
You've said that like 3 days in a row.
Because I fucking love it.
It's a really good one.
Such a good one. It's our job to take advantage of people's bad decision making. And, they say that you shouldn't kick someone when they're down, but that's actually the best time to kick someone, when they're already down.
All
right. And that's what the market is doing. Investors are down. They're not in. So kick them. Let's go.
Maybe.
What do you mean maybe? We have the data. What do you mean maybe?
The data about kicking them. All right.
No. I'm saying the data of people not being invested. We have the data.
I don't know.
Cash. JC's watching these cash piles.
I don't know. To Strazza's point, it wouldn't shock me if this money was a lot stickier than y'all think.
All right. I'll take the other side of that, and then we'll see what happens.
JC,
all right.
Are you getting those numbers from Fred? You're getting those from Fred's giving those to you?
No. I'm getting them from the old Investment Company Institute.
Wow.
The old ICI.org. No big deal. No big deal. Just going to the source.
I got to see what Optima has.
We can import anything you want. Is Hurley here? Where's Hurley?
He'll be on in a minute. Before we do that, let me just run through like one or two movers or headlines. Where do I want to start? I don't really know.
The guy who went to jail. The guy who went to jail. All right.
Nikola,
which is a stock that I have now totally erased from my brain, but is somehow still around, as evidenced by this chart. Not relevant to the stock today, but the founder, Trevor Milton, sentenced to 4 years in prison for lying to investors, lying about what their trucks were capable of, and all that jazz. This was one of the first SPACs in that SPAC bubble. This thing SPAC'd in, I want to
During
say
COVID, February 2020.
it was early COVID. Kenny Blake was all over this trade. Where you see all those green candles there on the left-hand side. He was all over it. He was crushing it.
Did these cars ever make it out into the wild? Like, have you ever seen? Never.
Nope.
Wow.
I've never seen one. Yeah. So anyway,
what do you think the market capitalization of the old Nikola is right now?
Oh,
100 million.
Wait, what do you say?
$1 billion. $1 billion.
Is it still?
I was gonna say it's high. It's probably higher than you think. These valuations
There's a
are crazy.
statue in the train station in Rahway, New Jersey. There is a statue of a one Nikola Tesla. And I used to give him a high five on my way up to the stairs because my girlfriend at the time, wife now, used to live in Rahway, New Jersey. Don't ever go there, by the way. It's not nice.
I was gonna say, why have you been to the train station in Rahway? I've never been to the train station in Rahway, and I live near there.
You don't need to go.
Yeah. All right. Wait. Hey, let me hop out.
The statue's pretty dope, though.
All right. Let me hop out and test Mike's mic for 2 seconds.
Yeah.
All right. And I'll be back.
Throw up the Mara, Fonz.
You got it? You got it handy, or you want me to pull it?
It's in the chat. We got it. I mean, this is the level we've been talking about, right?
$20.
Doesn't this look like Coinbase looked a month or two ago?
Yes.
Before a monster ramp up?
Yes.
I understand it's extended here. It's already been on a nice run, but boy, a little digestion. Give it a week or two to cool off. Hopefully, it just oils at this level.
Caleb Franson in the house. We'll give him his flowers, right? Shout out, Caleb. Nailed this one.
I mean, I don't think the move is even over yet.
I'd argue it hasn't even started.
I would buy this chart now. I think it was more aggressive. Yeah, kudos to you.
You think it rips through? You think it rips through those highs though, just like that?
No, I want something high and tight here.
This was just the amuse booze before the main course, or is this dinner? Is it second dinner?
They'll run this thing. This is a new bull market for cryptos. They should run this thing back to those old all-time highs. So
this thing's going to $100 roll.
You got a quadruple in this, 20 to 80.
Damn, son, this thing was like at 7 like yesterday. This thing has moved.
Look out. Post will be on the blog as soon as we're done here this morning.
Man, a little more of this. Daddy's getting his beach house.
But these are the conversations we're having internally. Like, where should these price targets be? Not 33. That's really the move you want from a stock like this, a high beta mover like this in a new crypto bull market?
I mean, listen, it depends on your time horizon. That's the next level. So it depends, right? Like,
but why not run it all the way back?
Because everybody has different time horizons than you, Strazza, and different objectives.
I want the 4X.
Okay, fine. That's you. And there's nothing wrong with that. But if you are making a trade where you're long against 19 with a target of 33, there's nothing wrong with that.
I don't know why you're getting mad at me.
Nobody's getting mad at you, but you're like, you think that the whole world thinks like you, like some dude from Connecticut who lives in the Keys. Like, you understand that like most of the world doesn't think like you, right?
We talk about this all the time. What do I say? You make hay while the sun is shining. The sun is beating down on us right now. Make the most of it. Take advantage of it. It's the time to be aggressive. It's the time to step on the gas. Let's go. I don't want 50% in a Bitcoin miner.
Right.
I want 400.
I think it depends on your time horizon.
All right, we got Mr. Hurley here.
Hell yeah.
Bringing him on.
Bring him on. Yo, Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Mr. Hurley.
Hey, Mike.
You guys look great. This is fun.
New
How are you doing?
New office, new walls, great lighting.
That's great. I missed the beat.
Where are you? They stick you in the bathroom, Hurley? What are you doing in there?
No, it's just a little conference room here with some nice shiny glass. Sorry about that.
Put him in the bathroom. Put him in the bathroom.
No way. They feature us here.
You're the opposite of mush, Hurley. You've been right on the money. Talk to me about this bear market I keep hearing about. Recession any day now. Market breath is weak, they tell me.
I know
it. Is weak.
I know it. Can't you just hear the bears capitulating? In fact, I saw a headline today, Mike Wilson capitulated. So people were telling me that has to mark the
And who
top,
is this
right?
guy? Who is that? I keep hearing about this guy. Who is?
Mike Wilson of Morgan Stanley.
Oh, he doesn't play for the Yankees.
No.
No, he doesn't.
So this is a
You're
Morgan
close.
Stanley perma bear. So if you're a financial advisor, or God forbid, a client of these people, and you've missed this entire thing, like, what do you do? Like, oh, you should open an account with Morgan Stanley because our research is so good, but then it sucks. So like, what do you do? Like, what do you do as a client? What do you do as an advisor? Like, sounds terrible.
Well, that's tough because he's part of their global investment committee, and that global investment committee has underperformed for a while now. Don't get me wrong, he did a good job in 2022. I think he was one of the highest graded analysts out there. To be honest, he's not a perma bear. He's more of a closet technician. He uses a lot of technical tools. He just doesn't do it as openly, or I would say as well as maybe the three of us.
Hey now.
I had to throw
How much does it worry you, though, or how much do you weigh the sell side? Because coming into last year was very different, right? Where the sell side was totally bearish. You had a couple kind of outlier price targets that were kind of talking about a bullish year. Other than that, everybody was bearish. This year, it's the opposite.
No, true. And again, well, and you can use it. I mean, that's where people sit, right? And it takes a balance of market, and you can sometimes see where folks get on and off sides. Now, that being said, I don't like to be too disparaging to the sell side. I mean, they do the best they can. It's true. A lot of folks start at the sell side and kind of then graduate to running money if they do well.
Do they really do the best they can, Hurley? Do they do the best they can?
Yeah, exactly. And so Katie and I and the three of us started sort of on the sell side. I mean, JC, you're a little different. You started with a hedge fund. Now you've gone to the dark side. I mean, sell side, publishing research. But again, there's some good folks out there. But just in general, it really is the market. And I agree with you. I think a lot of folks out there are still just too bearish. I think the market looks great. I mean, I know your takeaway earlier was, and Steve, you were talking about pile in on the cryptos. I mean, there's nothing wrong with piling into stocks here. And I know you can say maybe we've had a little capitulation, maybe this is a blow off, but you're still 1 year in a bull market out of what usually is 3 years. The second year of a bull market from October to October is usually 19%. So I think the path of least resistance is still, to the upside if you have a time horizon more than a month.
Probably going to be some nice catch-up trades too, and things like
that. Early, what do you make of all this cash, man? Am I overthinking the money markets at record levels? $4 trillion, and it's not like grandma locking in her 5%. It has nothing to do with that. $4 trillion record levels of cash from institutions. Is that bullish? Do you think that cash is sticky? What do you think?
I think both, JC, and I don't want to talk out of both sides of my mouth, but we're old enough to know when mutual fund cash was a legitimate indicator of sentiment. Now I think there is a real reason with rates, as particularly the 3 month up here over 5%, for people to say, hey, I'm okay with 5% and no risk. But at some point, I think that cash does come piling back into the market. It just may take a little longer this time because we're no longer in that TINA environment where there is no alternative. So now that there is an alternative, there's a real choice people have to make, and that'll probably be the capitulation is when that comes off the sidelines. But it's going to take a little bit more of a rally to get that. Maybe that 6 months or 1 year time frame. Maybe next October when we're up a little higher, people will go, all right, well, I guess things really are going to be okay, not hopefully going to be okay. And that's when they pile in, and maybe that's the last wave. But you've seen our shotgun chart and things like that where we try and put those historical cycles in one little clean, easy picture. And that shotgun chart still is 1 year into a 3 year bull market. And so I think we have room on the upside here.
1 year in and 2 to go. I hear that right?
I think so. Now, to be honest, and we've talked about this, Strazza, is the last cycle in a secular upswing is usually shorter and lower. So if this is the last cycle before a secular bear, maybe we get a 2 year bull market or a 2.5 year bull, something equivalent to 1968 before you went into that god-awful trading range of the 70s, or 2000, where you only had a bull market from October of 98 up to the top of 2000. That was only a 2 year bull. But if that happens, and if we only have a 2-year bull, I think that'll be the sign that we're finally in that secular trading range. But I don't think it's today for sure.
Can we talk about market breath?
Yeah.
God
Yes,
damn it.
please. I've been waiting.
God bless. What are we doing here? Hurley, 20-day high.
I know it.
20-day highs off the charts. Haven't seen that many 20-day highs in years. 63-day highs, right? 3-month highs off the charts. Haven't seen that in years. These sorts of breath thrusts, do they tend to happen early in cycles, or are they evidence of exhaustion and we normally see them at the end?
Usually early. And so I think the last time the three of us got together was in September. I was checking my notes. And at that time, we were worried about that pullback. We were in week 8 of a correction, my notes said, and we were worried about, is 4,200 going to hold? But backing up, the topic back then was pretty easy top to catch, pretty easy bottom to catch. I know you guys were all over it. The hard part of this market cycle was as we rallied out of that hole last October, breadth never really caught up. You didn't see the strong breadth measures that you saw normally at the bottom of a bear market and the start of a new bull. And that was confusing to all of us, and that's the Magnificent Seven. And my answer to a lot of folks back then was, well, I understand the Magnificent Seven are strong, but if Apple is as large as the Russell 2000 and Microsoft is as large as the Russell 2000, if those stocks are in healthy shape and making higher highs and higher lows, then that's the equivalent of 2 Russells making higher highs and higher lows. And it's not, by definition, a bad thing. Now, if those stocks look toppy, maybe we have problems, Houston. But the point is, the start of this bull market didn't have the breadth we all like because of the 7. Well, man, last week, you got it. Last week, you got 441 new 52-week highs on the New York Stock Exchange. Usually that happens in the first half of a bull market at some point. Prior to that, in January and July, we only had like 280 and 300. So there was a significant expansion in new highs that I think is healthy and indication of more to come.
We've seen it
Again,
before,
usually that
Early,
happens
right?
in the first
You've
half.
seen it before, like
Say
you've
again?
seen stuff like that before, like in '88. You saw it again in the early '90s, where that breath thrust really kicks in. Maybe in year 2, right? Which maybe is that what we saw last week, that heavy breath. But even when you look at, when people were talking about weak breath all year, a lot of people were leaning on year-to-date numbers and completely ignoring, perhaps maliciously, that the sector rotation kicked in the first week of the year. So even though, generally speaking, we don't like to lean too much on year-to-date numbers, this year in particular, year-to-date numbers are very skewed because that's when we got the rotation into growth and mega caps. Right?
Yeah, the Dow was working in Q4.
Well, right. And so that's my whole point is the top was easy, the bottom was easy. But as we rallied out of this hole, there was a lot of risk that this really was a bear market rally and we were starting that secular bear. Now, again, you don't want to predict it, but you want to monitor how this thing rallies. And while what you're saying is true, what was more obvious to folks was just the percentage of stocks above their 200-day. I mean, that never really got up in that 60-70 range. It's starting to now. It's at 68% last week. But I use 40 as sort of my bull market trigger.
Yeah.
Well, man, that thing went above 40, back below it, up. It just never really got above 50%. And when you have half the market not rallying above its 200-day, you want to be careful. Then you figure out why. Well, it's Apple and Microsoft dragging everybody higher. And they were dragging everybody higher. But those were healthy charts. And those charts weren't
So is there any implication to, I guess, this participation or breadth expansion coming a little bit later than usual? Because I'm looking at the high readings and the breadth indicators that we got last week, and I'm tracing them back. And I'm saying to myself, the last time we had this high of a reading, and in so many of them, it's May or June 2020. And that was like right off the lows back in 2020, right? What did we bottom in March? And a couple months later, we're firing all of these breadth thrusts. We didn't have that this year. It came after the NASDAQ's already up 60%. All of a sudden, we're getting these breadth thrusts firing. How do you like, historically speaking, have you seen this in the past? And does it make you think?
1988, and you saw it in 92 also.
So what does it mean?
Well, and so not exactly, because every little different, but you can go back to that bottom we had in 15 and 16 with the, won valuation and that long bear market over 6 months. When you came out of those lows, you didn't see the peak in new highs until a year later. Well, that was a year into it. But again, if you look for divergences before that infamous fall day, you're going to get hurt because that peak in leadership early in a bull market or halfway through a bull market. And so divergences are the hard thing the last year of the bull market, which is why you really have to wait for some damage and the new lows to kick in before you worry about divergences. So
Hurley, was last week the exact opposite of a fall day? Was last week the opposite of the first fall day?
I don't have a spring day indicator, but yes, I think yesterday or last week was confirmation. The closest I have for a spring day is when the percentage of stocks above their 240%. Now, it didn't work this time.
You got above it, you failed.
You got above it. The NYSE.
What universe, Hurley? NYSE.
And
the New York Stock Exchange.
You need to. So you say you need to pair some of this breadth data with price, right? You talk about monitoring the damage, right? So you're watching the trend. Weren't you using a level in the Russell 2000 to kind of, you had like a line in the sand in the Russell? Or no?
Yeah, so the Russell did a good job of leading the bear market. Remember, it broke out to the upside, failed, broke down before the S&P, which broke, I want to say, April of 22. The Russell broke first. So the Russell's been a good lagging, leading or lagging, depending on what part of the cycle. The point I'm going to make here, and I'll be quick, the expansion in breadth, I think the implications is not of a blow-off. It's of the Russell finally starting to participate. So the rotation you mentioned earlier, you're really starting to see it. You're really starting to see things catch up. Not only are the builders at new highs, but the KRE is now put a little W in place on the chart. So the laggards, like the financials, are starting to catch up, and that's that expansion in breadth that I think is the implication of the breadth expansion.
Yeah, how about those banks?
I think they're a good trade into next year. I really do. I think they're going to play catch up. There was a good piece out there the other day about the relative strength of financials coming out of the 84 and 94 hiking cycles. And they showed that the financials have good relative strength compared to the market coming out of both of those cycles.
Top performing sector, 2024.
Wow. I would have to say maybe financials, but I kind of like some of the overseas stuff, to be honest. And if the dollar remains weak, you have some emerging markets that are really acting well. Of course, India is on fire, but even some things that are turning the corner that are sleepers, like Brazil. And did you guys talk about it earlier?
Over the last couple of weeks, we put together a Latin America scan. Spencer, just throw it up so you can show Hurley. This is just Latin American equities above $1 billion market cap that trade on U.S. exchanges. There's about 63 of them. Yeah. You're not going to find a lot of technology in that group, but you got a whole lot of other stuff.
You do. And I know we've been gold bugs for a while here, the three of us. And I think gold still has some good chance to outperform and have a good 2024. If you can hold above this 2000 area on the chart, you've got a nice 3-year trading range you're coming out of. And if you look back 10 years, that looks like a big cup and handle. So, boy, if that's a big cup and handle on a 10 or 12 or 15-year chart, man, gold can see 2,500 before you know it. Now, I'm not predicting it. I'm optimistic on gold. I'm still waiting for a little more of a confirmation. But, the GDX and SIL are kind of breaking down trends. And now they're catch-up plays. They're not leadership plays like India. But I think that could be a good sector that nobody's talking about right
now.
Yeah. And you see it in positioning. What about
biotech? In your Latin America.
Nobody owns healthcare, Mike.
Yeah. Yeah. And if you get a spark there, you could see some flows. And that sector has gone sideways for a long time, too. Now, that's pretty political. And you want to be careful on that one because it can be just so tough in an election year as people start chirping, but maybe that's the positive
Yeah, they
catalyst.
told
Who
you,
knows?
think about
You
all these
know?
Biden things, right? Like pot stocks are crushed, right? The energy stocks did really well, oil and gas, right? Like things in theory that shouldn't be working because of Biden did. All these clean energy stuff, like all this, all the whole ESG scam, blew up in everybody's face. Like the things you would think under a Biden administration would have done, it's actually been the exact opposite, right? So
Well, and that's why I think, I know I'm preaching to the choir here. Market action is the most important thing. Look at the builder stocks. If you'd have said we're going into a, 2023 with an inverted yield curve, what's going to happen to the housing stocks? Oh, they're going to get crushed, of course. Guess what? They didn't. And they're telling you that they're going to probably perform pretty darn well in 2024. They're leading the way. Yes, I think the KRE is a nice catch-up play, but the banks aren't wounded by any means, even in an inverted yield curve. I'm sorry, the builders aren't wounded,
so,
even with that
so if you're
inverted yield curve.
talking biotechs and you're talking banks, smells like a hell of a year coming for small caps, Hurley.
I think it is. And I think the Russell is battling that 2,000 area right now, a little bit above it, a little bit below it. But, that was a pretty good gap last week, and it's pushing the top of that range. And I think that's the theme of 2024 is I know the everything rally has gotten a bit of a bad name, but guys like you and I call it rotation. The Magnificent Seven aren't going to be in downtrends, but maybe they rest a little bit and give that leadership baton to everything else. And you do see some of those smaller names like the KRE play some catch up and the Russell play some catch up.
And you talk about the inverted yield curve too. The banks have had this huge rally that they've had over the past month and a half, 2 months with an inverted yield curve.
I know, and that is a bit of a quandary. I wonder if that inverted yield curve is not going to be a good recession signal this time. And again, only time will tell. Now, the banks did get crushed. Remember, early last year, we actually had a couple fail, right? So I think some people were off sides, but maybe they've got it fixed by now, or maybe the damage is just done. Maybe they've, refixed their balance sheets and, have a better posture going forward, or maybe it's just market sentiment that got washed out. Everybody got scared, and now they found a nice little double bottom there. But only time will tell about the health of their business under that inverted yield curve. But the stocks are improving, and again, I trust the market action.
As it turns out, bank runs happen at bottoms, not tops. Who knew?
Yeah, that's a good point. Who knew? Bank runs happen at bottoms. That's the wisdom of the day, I think, right there.
Talk to me about the rug pull, Hurley. I keep being told that there's going to be a rug pull any day now. Major correction. Hedge your positions. Like, what are your thoughts from a more tactical perspective here on December the 19th?
From a tactical perspective, I hear you and I understand it. You did get a little overbought here, but to me, overbought is strength. I think that rug pull is probably a Q1 event. Probably all this euphoria, wears off sometime early, mid-January. Maybe you get a little divergence in internals. You get a little divergence in momentum. You pull back to a 50-day, something like that. I don't think it's going to be a hard rug pull, but I think you're even a little bit early for that, Paul. The momentum, you've been shot out of a cannon. It's going to carry for a little bit.
Is it too clean that we rip into January and then late January you start seeing some breadth deterioration and then you get that correction in February into March? Is it too easy that does it make too much sense, Hurley?
Exactly. And that's the hard part, JC, is sometimes it is too clean and too easy. But then I harken back to two things. One, the first year this bull market was hard. We were stressed out a lot when we saw that percentage of stocks above the 200-day go up and below and above 40%. I mean, those were hard days, and that was the hard part of this market. This cycle finally got a little bit easier, and you should take it. The other thing I'd say is sometimes when you're worried that it's too clean and too easy, think back to that nice head and shoulders top we had in 2022, right? Oh, it's perfect. It's a perfect head textbook. Well, we still, all of us who saw it building, still had to wait for the right shoulder to form. Then it come down, then for it to break, then for the rally back. That was torture. Even if you saw it coming and you knew it, it was torture living day by day watching that thing unfold like a slow motion car crash. So even if you do have the market suitcase, which none of us do on a day-to-day basis, but even if you have a good outlook, you still have to live through it. You still have to stick to your guns, make sure that the checklist is going as you would expect, and really make it easy when it is easy, because it was hard last year, if there's any wisdom in that.
All right. Mike Hurley, it has been great to have you on today.
Mike, we got to get you a mic, bro.
Yeah, sorry about that. I had a headset, but again, we had some technology issues a little bit early when I was logging on. I'll get one next time. We've got one here.
Stick them in the bathroom.
Mike, happy holidays, happy New Year, and thanks for coming on today.
Thanks, you as well, guys. It's nice to see you as always. Happy holidays to all of you, and great trading in the days and weeks ahead.
Love you,
Go
Mike.
get him, Mike. Go get him. Give him hell. Mike Hurley.
That was great.
Hey, what did he say? Like a rocket? Did he say rocket? This thing's gonna keep going.
I think you just got these mortgage companies.
I heard rocket.
I think you just got these mortgage companies in your head. All this beef in Michigan that you want to be a part of. Who knew? Who knew there'd be old man beef, right? Amongst Michigan mortgage lenders.
Crazy.
So much. And they both own NBA franchises. So
so one of them owns the Cavs, right? That's Gilbert.
That's Gilbert.
And what's the other one?
And then I think his last name was Ishba. He just bought the Phoenix Suns.
Ooh.
Wow.
So
all right.
Yeah.
All right.
All right. 9:28 here. Let's do a quick rundown of some other headlines. We talked about Nikola for 4 seconds. That's all they're going to get. Apple, if you are a last minute Christmas shopper and you were looking to buy a very last minute Christmas shopper, actually, and you were going to buy someone an Apple Watch, you better move on that now. They are going to pause online sales of their 2 most recent watch models beginning on the 21st, and they're going to pause the in-store sales on the 24th. This is going to be a temporary thing. It's due to an import. I guess they violated a U.S. import ban related to patents of one of their competitors. So it's going to be a temporary pause, and it'll only affect the 2 most recent models of the watch. So
I don't understand.
Okay.
What I do want to say is that these buy now, pay later companies are absolutely blowing up. Did you see those Black Friday numbers? It was something crazy, like double-digit % of the sales made on Black Friday were BNPL. Holiday season is going to be huge for these companies.
What's the rate on this particular scam?
They say if you pay it, you don't pay any interest.
That's what I don't understand. That's what I never understood, because I thought the rate was 0, which is why this makes no sense to me. Like, as a business, it makes no sense.
I mean, it's subprime. They're hoping that you don't pay, and they charge you like 30%.
I thought the rate was 0, but I must be wrong, because I don't know.
They're doing is the point. They're going to keep reporting bigger and bigger numbers, and these are heavily shorted stocks. This Affirm and this Upstart, and they're squeezing right now, and they have tailwinds ahead of them in terms of putting out those holiday numbers soon, right?
Yep. Okay, sticking with big tech here, Google's going to pay $700 million as part of a deal to settle this antitrust lawsuit against their app store. Yeah. The news of the settlement is not new. What's new today is the monetary amount, which we didn't know. So $700 million. They have some other antitrust suits that are still pending as well. So we'll probably see this headline again next year or the year after. But there's the number on that. What else do we have? UBS. We had an activist stake. Maybe we'll talk about that during Hot Corner. We don't talk geopolitics on this show hardly ever, but a couple of major shipping companies have temporarily halted their tankers from going through the Red Sea due to some attacks over the weekend. So that appears to be a temporary, temporary delay for some cargo. They're having to go alternate routes now, but the U.S. and some other countries are going to try to put the kibosh on that. Big loser of the day is CureVac, CVAC, a German biotech company doing mRNA drugs. They just lost a patent case in Germany that was brought by BioNTech. So CVAC down about 40% on that. That's kind of all they do, is the mRNA stuff. Kenvue, this is the J&J spinoff. They got a favorable ruling in a case against Tylenol. That the case was brought by it was a class action, I think, and it was basically claiming that infant exposure to Tylenol caused autism or ADHD, but a judge ruled in favor of Kenvue, so KVUE up on that. What else did I have? I think that was it. Small headline on Kupang, not interesting.
Might as well give the UBS headline. I don't know what makes you think that's going to be in the hot corner. So one point.
I don't know. Activist stake, Sevian Capital. I hope I'm saying that right. $1.3 billion stake in UBS.
Can you explain to me, for us ignorant folks, why it would not make the hot corner?
You got to own 5%. So they took 1% of a $50 billion company, or $1 billion in a $50 billion company. You need to break that 5% threshold to trigger a Form 13 filing. And then it's even higher for a Form 4 to hit the wire. You need 10%. So there won't be a filing for that. What these activists do is they build a stake, in this case, kind of a small stake, and then they just announce it. Hey, we took a position.
Yep.
Reuters writes an article.
Yep.
Stock goes up.
Well, I mean, it goes up at like 5 in the morning.
Can we do the hot corner? Because this guy Graham Walmsley dropping $7 million on this little biotech.
Well, the Chewy buys continue to stand out too.
Let's see.
Let's see.
Hot corner. So hot right now.
Talk to me.
Throw it up. Chewy's the one that stands out to me. This James Starr just keeps buying stock. So another $250,000 today and another Form 4. Look, I don't hate the idea of buying some of these beat up growth stocks against lows. We were looking at PayPal yesterday. Go ahead. We could put these trades on in this kind of an environment. Chewy's really set up for a little squeeze here. It's a short squeeze name. We're seeing insider buying.
Go slide 3 up, Spencer.
Over again since last week. Yeah, we got the chart. Yeah, why not?
What's the level? 22?
Yep.
So above 22, the squeeze is on.
Why not?
And then Chewy is what? This is your cat food?
Yes. They do a great job.
$10 billion cat food, huh? All right.
So
I'm into it.
18% short.
What's the days to cover?
21 million shares, and I'm seeing average volume of, call it 8 million.
So 2 or 3.
So like 2.5 days. Yeah. Right.
Man, it's a heck of a squeeze, man. Look at that. Above 22, and we're above 22 right now. So this is a go.
Go for it.
All right, I'm going for it.
Great platform. I hope these guys figure it out.
Buying 5,000 shares.
I'm a satisfied customer.
They seem to do great business everywhere I go.
Seems like you're the only satisfied one based on what shareholders.
No. At like the last 3 places I've lived, I've seen like Chewy boxes like at least once or twice a week. Yeah.
Yep.
So.
No, they're the best place. If you have a pet, that's what you're shopping at Chewy. I get the medicine there too. I get discounts on the flea medicine, the Advantix for the cats.
Oh, that's
great.
That's for the cats, right?
Cats get fleas too.
Sure.
They go outside, so I don't want to risk that. And then I do like the subscribe and save for the kitty litter and the food. We're on a schedule here. Moody stands out too. Do we have the MCO chart? So this is a big one. Here's how we do the Form 13s, right? It matters more to me if it's an original filing rather than a revised filing. I think we do an excellent job at making sure all the original or initial filings, right? Because that's telling us there's a new stake here, right? A new buy. This would be Berkshire for Oxy March of last year, right? And then more and more buying tends to come a lot of times. So original filing, brand new position, Form 13 for whatever this TCI. I never heard of them, but great looking chart too. So
like the face that Strazza makes when he's never heard of I've never heard of them.
I'm sure they're fine.
I'm sure they love their kids.
These asset managers, why don't we throw up that custom index? These asset managers look so good. I think so real estate stocks have really took off, right? And been leaders over the short term. Asset managers, I'm more interested in. Same dynamics at play there, right? Where their balance sheets are really kind of the pressure's coming off their balance sheets with rates coming down. So that's why you're seeing these huge moves in REITs. But the asset managers too, they're moving the same way. I'd rather be in these stocks than a REIT. Carlyle Group, KKR, Blackstone, even BlackRock. BlackRock looks great.
It's the alternatives era, Steve.
LPL, check out LPL Financial, Charles Schwab.
Texas Pacific, TPG. I like the more private equity ones. PE stuff. They'll pay nice yields too.
Interactive Brokers right here.
No, but it hasn't been behaving well.
Yeah,
so
well,
frustrating.
you know, there's a time and a place, right, Spencer? Tell them.
Yeah. I mean, we haven't talked about Moody's in a month, right?
Remember how Moody's downgraded U.S. debt after U.S. debt had its biggest collapse ever? Thanks, guys.
No, but there was a time there
U.S. debt rallied.
that we were talking Moody's, CME, SIBO, all these guys. Like it seemed like every other day there, right?
Rachel, both, right? Both asset managers, BLK, BX.
Who's the better one?
I like the private equity stuff, right? Like BlackRock is more of a fund provider, okay, right? An ETF provider. Blackstone, they're investing in real estate, alternative investments, right? They're a PE shop. I would rather be in the PE stuff.
Yeah, but BlackRock controls all the companies along with Vanguard. I'm just kidding.
Listen, BlackRock's great. I think they're going to be just fine. And the reversal just printed. Chart looks great. I think the PE companies offer really, really juicy risk reward here. Just printing reversals too. There's a lot going on. And then I think to the point about brokers or something like Interactive Brokers Group, it's I don't want to say it's risk off, but it's relatively defensive. Those businesses within financials, everybody's moving out on the risk spectrum, right? Moving to the most offensive groups. I think that's the problem with Interactive Brokers right now. Same thing with insurance. Right? You're seeing insurance stocks get sold and the regional banks get bid up. They're just moving into riskier assets. You could see it within the sectors when you drill in, right? We're not just seeing rotation, or it's not even so much rotation. We're seeing broadening of participation at the sector level. Then within the sectors, you're seeing money move or flow out of the defensive industry groups into the most offensive industry groups. Go sector by sector, you see it.
JC, you want to look at the markets? I see a lot of green, a little bit of red, mostly green.
I would encourage everyone to go back and study bull markets throughout history. You know what you're going to find? You're going to find quite often stocks go up in prices, right? Like you see it like all the time, fairly regularly in bull markets. Today's no different here with the Dow Jones Industrial Average. World's most important stock market index up 65 points here. 10 handles on the S&P, 20 basis points. Bond futures up again as stocks and bonds continue to move together, you see, because bonds are not a safe haven asset. In fact, the correlation between stocks and treasury bonds remains positive, arguably getting more positive and stronger. So that's certainly not a trend that we want to fight. Gold futures up 50 basis points, silver up 1%. You got copper up almost 2%, oil up 1%. And then you've got yields coming off, the dollar coming off. And then over at the old funny money, Bitcoin flat, Ethereum flat, Solana flat, nothing really going on in the world of funny money. But I will point to the dollar index futures, which are being skewed here with the yen getting the crap kicked out of it. So keep that in mind. Euro's up, but the yen's getting destroyed. So keep that in mind.
So I'm taking a walk yesterday. I'm thinking, Should we be buying high yield bonds? Should we be buying emerging market high yield bonds?
I mean, it depends on your objective. You don't strike me as the type of fella that would do such things.
It sounds too exotic for me.
Sounds too
No?
boring for Strazza.
The riskiest asset, junk bonds don't bore me. Junk bonds got some juice. Come on. The riskiest assets are really working.
Are you going to actually buy a junk bond, or are you going to buy an ETF that has junk bonds?
Buy one of these reversals, an HYG, JNK, take what, 4, 5, 6%? What are these things paying today? HYG 5.5 3/4. I mean, I don't know.
You're gonna buy a junk bond ETF, Strazza? Stop it.
It looks like the other charts that we've been buying. These now look like those. So
if
just something
Strazza buys a junk bond fund, I retire. I'm done.
I think it's a fair question. I think it's a fair question to ask.
I know, and it gets back to what we were talking about before. It depends on your objectives, your time horizon, and for a lot of investors, that makes sense. For financial advisors, putting their clients' assets into different funds and whatnot, it makes sense. For Chief YOLO Officer Steve Strazza over here, I don't know. If there's so many other charts that look like that, why wouldn't you be buying those other charts? Is the higher beta moves.
You want to know what I bought yesterday?
I would love to hear.
I think Sean got into it too. Ooh, I did get filled.
We had people guessing, Steve, what your Chinese stocks were, because you said one of them, but you didn't say the other one, I think.
Oh, I got blown out of it already.
Okay.
Absolutely crushed. Here, I'll show it to you. You guys, why don't you talk amongst yourselves? I'm going to drop in 2 charts.
We can do that.
Spencer, why don't we do a little chart report?
Yeah. Where is the chart report? It's here somewhere. Yeah, it's where it always is. I'll bring it up.
All right, what do we got?
Chart of the day. Brian G. More sentiment stuff.
I like Brian G a lot.
He's saying exactly what you said an hour ago.
Which was?
So, smooth out the sentiment data.
Because he's a smart fella. This Brian G. Good Canadian. God, I love me a good Canadian. How do you hate Canadians? Who hates Canadians? Seriously. Good eggs.
I don't know. Has anyone said they hate Canadians? They're electable people. They're electable people.
We have a Canadian in house who is not a fan of Canadians.
Oh, if you're Canadian, you are not just if you're in any group, you are allowed to hate that group if you're in the group.
Got it. I don't hate Cubans. Do you hate Jews?
Some of them annoy me. Anyway, what else we got here? Still got the S&P streak. So that's something.
Tell me about the S&P streak. So Ryan Dietrich, S&P up 7 weeks in a row. On the surface, one might think this is bearish. I don't know what's bearish about stocks going up. But he says these trends happen in bull markets. Up a year later, 25 out of 29 times, 87% hit rate, 86% hit rate.
I mean,
I made the chart report. Look at that. Hey, now. My mom's going to be so proud when I send her that I made the chart report. Look, Ma.
I think we're about 3 months past where you can refer to the bank crisis, because
I was promised a crisis.
That was 9 months ago now. Let's move on.
Remember how adorable it was when they kicked out, when there was like 3 little banks that no one's ever heard of? Remember how adorable that was?
Let's move on. Yeah.
It was so cute.
Look, it doesn't make it any less scary when a bank or 3 are failing and people are, I mean, they're insured by the FDIC, but still, I mean, bank failing is a scary thing. Now, does it mean it has to have implications for the broader economy and the market? No, of course not.
Yeah, it's scary, like a monster under your bed, or like, your night light not working. Like it's cute. It's so adorable.
All right. Let's see. The weirdest looking bull market in decades.
Yeah, Callie Cox. I'm gonna call her out here on this one. She should know better. We're big fans of hers. It's just there's no reason for it. You know, these year-to-date numbers in general. She's talking about how the weirdest looking bull in decades, possibly ever. S&P's up 23% this year, yet 71% of stocks are underperforming the index. First of all, year-to-date returns are you really want to be careful with them in general, but this year especially because you got that major sector rotation in the first week of the year. So this year in particular, year-to-date numbers are going to be very skewed. It's not a breadth thing. It's not a weird thing. It's just a sector rotation thing. So if people would just go back and look and just count, you'll see that the sector. So, year-to-date numbers, again, be careful with them. This year in particular, just ignore it completely. It's meaningless.
Okay. I mean, I like year-to-date is like a clean thing to look at in your brain, which is why I like it. Right, that's probably why everyone likes it. But you're right; it is arbitrary. Right?
Trust me, I know I'm right.
Doesn't mean I like it any less, though.
This is not an opinion. These are facts. Facts only, Strazza. Right? No opinions here.
You know what? I've been meaning to try to get Yuri and Timur on this show.
Please get Yuri and Timur on the show. We're gonna get Denise Scholl on the show. Big fan of hers.
Yeah, we can do that. Okay, guys,
chart report. He's the man, dude. He is the man.
Chart report, get it. It's free, daily, in your inbox. QR code on the screen right there. Bada bing, bada boom.
My favorite email of the day. Tied for first with the hot corner.
Throw up the go-to. And frankly, this is not for everyone. This is a small stock. So
how small?
Do your homework. I think like 800. It's just under $1 billion. Look, there's a huge pocket here. I took a flyer, got long calls. This thing got slammed coming in this week, down like 20% yesterday. If it heads back towards that 450 level, I'll probably buy more because these patterns have been working really well. These little volume gaps or memory pockets, once they get entered, they get filled really quick in this market. So we'll see. But it's a bull market. You can do these things. Can take these kinds of chances.
I really like these volume pocket trades, really do.
Yesterday, I bought some of this UiPath. This is an ARC name, right? These are the stocks that I'm interested in. I want the ones that are going to go up the most. And this one very much fits that mold. Throw up the path. So I'm in common. I added some kicker calls like 2 weeks out. This one's been popping up on our option scan with unusual options flow like every single day. 30,000 calls were traded in one of the contracts yesterday, like 2 weeks out. Had an open interest before that of like less than 1,000. So that's the kind of stuff we're really looking for on these unusual option scans. So this one continues to pop up. I'm in some June calls too. I think Sean got into them with me. June 30s. They were cheap, $250. Go all the way out to June. $30 strike. I don't know. If this base is complete, you're going to see a lot higher than 30 by June, I think. So those should pay well.
I spent that entire time you're talking trying to think of a funny pun for go-to, but I failed miserably. So
yeah. Go.
Anyway, moving on. Steve, you want to talk about solar stocks today? We did have an upgrade. I think it was Sunrun at Piper, right?
Sonova too. So breeze through the note. Actually, I get these notes. I breeze through it. You know what the bull case is?
Rates coming down.
That's it. It's not, business is turning around. These are viable business. No. Fed pivoted. That was the note. The Fed pivoted. You could buy solar stocks. Again, this is the market that we're in. These really long duration.
Wait, but what's so wrong with that?
Nothing.
Okay.
That's, again, it's the environment. They're not wrong to say that, right? But it's not about their individual business. It's about the interest rate environment. And that's the case for so many of these long duration growth stocks, right? You could have wrote that note about far more than just solar stocks, right? They could have covered a handful of industry groups, right?
It does feel like every week we find ourselves further and further down or further along the risk curve. You're talking, small Chinese stocks all of a sudden, right? I mean, now we're
Chewy against the lows. Solar energy stocks had one of their best weeks this
Carvana,
last year.
right? I mean,
Yeah. Shorted stocks. Yeah. Again, in bull markets, these things start to make more sense. And that's basically what the sell side was saying with that note.
Yeah. Solar stocks, like most stocks have been going up. So,
At what point have interest rates come off too much?
I asked this question in New York City the other day when I was giving a presentation at the CMT Association, and the answer from Tom Lee and Mark Newton was 1%, and they were saying it laughing as they took a sip of their beverage. Wow. And then yesterday, Jeff DeGraff was on the old what's this channel? CNBC. And he said that falling yields he said that like stable yields under 4% on 10s is bullish, but if yields really start coming off and you start seeing 3.25, that's like I forgot what he called it, like sort of more of an outlier, but would be incredibly bullish. Like that's not the base case, but if that does happen, stocks absolutely rip. So the answer to your question we don't know the answer, but those are a couple of smart folks who we trust and we appreciate their work. And those are their opinions. I think those are valid. I mean, I'm not going to disagree. I agree. I mean, clearly the correlations would point to that. So, if you think that falling yields is bad for stocks, then you're either really bad at math or you think that correlations all of a sudden are going to change like tomorrow, which that's a tough bet to make. You can make that bet, but that's a tough bet, man. There's easier bets to make.
Yeah, you'll see it when it happens.
Yeah, you'll see it when it happens, right? Exactly. Why do you need to like bet that it's going to happen? Why don't you just wait and see? And if and when falling yields becomes a negative for stocks, which my suspicion is at some point it might, I shouldn't say it might, at some point it will. Whether it's next year or whether it's in 10 years or 20 years, I have no idea. But why are we going to bet that it's going to start tomorrow? Why don't we just wait? Right?
With you. I'm with you.
I'm not like trying to convince you. I'm just kind of like thinking through this, right? Like the market will show us.
What do you think about these material stocks, JC?
Listen, I'm a material girl. I mean, that's just what it is. I like them. Chemicals. Let's go.
Sean put on the Southern Copper yesterday. Steel stocks are just buzzing out here with this U.S. steel news. Industrial metals, metal fabrication stocks, aluminum stocks are squeezing, popping up on our unusual option scans. Freeport McMoran is even going up.
How about that? The old Freeport McMoran.
Hey, let's look at the follow through. Oh, yeah. Just always interested in the follow through after a day like yesterday in those steel stocks, right? So
I have all these equal weight indexes on my TC2000. So equal weight materials looks like XLI, new all-time highs, taking out the 2022 highs.
There was a question in the chat earlier in the show about float. Do you guys look at float when doing analysis? Like I think the comparison was like a Carvana versus I forget what, but Carvana's float is much smaller than most other stocks that we look at.
Well, yeah. So Spencer, when we do the short table, we're not calculating these numbers based on total shares outstanding.
Right.
It's based on the float.
It's
so it's very
days to cover short interest, right? Yeah. So it does, of course, but it doesn't impact how you think about this like a stock, right? It's not like the most important thing.
Well, if it's super low float, I'll want to know why. A lot of times it's because there's like large inside ownership or institutional ownership, right? So it's one of those two things. So I'll take a look and see why, right? Listen, low float, the better. If you're looking for a short squeeze, the lower the float, the better, right? You got to be a little careful. You don't want to trade something that's not going to be liquid enough for you to trade it, but the low float, that's how we get a squeezing.
Yep.
Right?
That's how we get a squeezing.
Somebody asked for analysis of a specific stock. Andrew, if you come back here at 1 o'clock today for Chart Request Live, you can put your request in the chat, and the whole show is just Strazza and Pat ripping through charts that you asked for. So Chart Request Live, 1 o'clock. Drop your come back for that and drop your ticker in the chat there, and they will.
And I think that's MDY, so that's the mid cap 400. Look, you got a clean level right there at 500. If you're above it, the base is completed. The reversal is in. There's a beautiful hummingbird that just hangs out right by my window. I sort of just watches the show every morning. It's great.
Does he have any questions? He or she?
I don't
Okay.
know. Just join.
Things that happen in Key West. Am I right?
Yeah,
All right,
definitely not in eastern Pennsylvania in the middle of winter.
Let's do some recess.
That's for sure.
Recess. What do we got?
I got to tell you.
Tell me.
I got to tell you. I continue to think that the left bank of Bordeaux is so underrated. So underrated. Like, it's all about the Italian wines these days, which I confess, I have my mental problems with Italian wines. I'm obsessed. Love them. But something about the funk of that left bank of Bordeaux, that gravel soil and that Cabernet Sauvignon from the Medoc, it's the funk. And I've been really into this Gorgonzola butter that I've been doing. This Gorgonzola herb butter.
Awesome.
Fucking, I can't not have a steak with it anymore. And that funk from the Gorgonzola, like, I don't go full blue, like, if you want to just like
never go
send,
full blue.
I mean, like, if you want to go full send, knock yourself out. I'm more of like a more mild Gorgonzola kind of cat. You know what I'm saying? But you're still getting that funk. And you can go Italian, but I just don't think that you're going to get enough of that funk in from the Italian. You want to get that left bank of Bordeaux. The actual scientific term is called Brettanomyces, right? Which is the funk that I'm referring to. And, with that Gorgonzola herb butter on that ribeye with that left bank Bordeaux, forget about it.
Funk.
Right.
It's a technical term in the wine community.
The technical term is Brettanomyces, or Brett for short. But that's what it's like that barnyard, like funky,
like that goat cheese stink.
Yeah, it's a little stanky. I'm into it.
All right. My recess is: are we in a bubble for like intentionally bad Christmas movies? Like, how can there be so many every year? There's dozens of new ones, and they're all like Lifetime, Hallmark Channel type stuff, and they're all bad, and they're all the same movie. I don't understand how this sustains itself.
Netflix has too much money. That's the problem, and it's not just Christmas movies. We're in a bubble. All bad movies everywhere, all the time. They're terrible. Everything Netflix comes out with is awful. People talk about Disney and how it's flop, 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 flop. Go watch some of these new Netflix movies. They're awful. I know that like it's more of like that's their target audience is just much younger, so that's a big problem. But it's really low quality.
I just like every year and the wife has to watch all of them or like as many as she can, and it's like, and she knows they're bad. Everyone watching knows that they're bad. And
does she know that you call her the wife?
I don't know. Maybe.
Or want to keep that to yourself.
But like, it's just I just don't understand. Yeah, corny. That's it, Rachel. They're corny.
Really?
And I guess that's part of the charm. Maybe it's lost on me. I'm not the target demo, clearly. But I don't know, man. I just don't understand how every year there is just a new class of several dozen of these things. It's like they churn them out. It's like a assembly line. It's wild.
We rewatched. You ever seen Jingle All the Way?
Is that Arnold?
Yes.
I
Arnold
love
Schwarzenegger.
that. Now that's a good movie.
Sinbad, dude. What's the guy's name? Phil
Hartman. Rest in peace.
He is so funny in that
Yeah.
movie. Like, he is amazing. We were dying. That's a good one.
That's a good one.
That's a really
yeah. Yeah. Look, there are good ones out there. And I'm just kind of blows my mind that like just the ratio of good to bad is like 1 to 100. So
Can I just tell you, I saw the Rockettes a couple weeks ago at the old Radio City Music Hall. Let me tell you something.
Really?
It is awesome. They got all the dancing Santas. They got like little flurries falling from the ceiling. They got the soldiers. Rockettes for
never
the
seen
win
the Rockettes.
all
It's
day.
on my-
Never fails. Go
on
see
my
the
list. I've
Rockettes.
never seen that show.
Get yourself some whiskey,
That's cool.
some popcorn. Sit down, enjoy the show. Trust me.
All right. Good deal. All right. It's Tuesday. So we have Twitter Spaces at 11 o'clock with Chart Report. We will be back here at 1 for Chart Request Live with Strazza and Pat. And that's what I've got for the day. So thanks to our guest, Mike Hurley. Thanks to all of you for hanging out. Give us a follow. Give us a like. Give us a shout out. Shoot us an email. Any questions, comments, concerns, feedback, good, bad, otherwise. We appreciate that. And that's what I got. Go make some money, all right?
I bought some chew.
Okay.
Run it. I can't take no loss.